Hello and welcome to this video. Today I'm going to be doing a stock analysis on Unitedhealth Group. Now, you probably know this because this was the CEO who got shot and killed allegedly by Luigi Mangione. And now this can also be seen in the stock, as you can see here on the 4th of December, where he was shot. As you can see, it takes quite a hard fall from that point. Now, the reason I want to highlight this is because it has actually had a second golden cross here. We did see one right after it happening, and then it fell down again because of some bad press, and then now it is regaining. Now, I do like the stock in general, to be honest, simply on the way that they do business, because they have one of the best margins in the entire health sector in the US. Now, you might say this is unethical to purchase a stock like this, but they're just a business trying to make money like everybody else. Now, the stock itself has been performing quite decently. As you can see, it is a bit of up and down, but as you can see, if we go back some time, it trades quite often, quite highly, and then some years, as you can see, up all the way up here in 540, and then we did see, of course, the peak right up here in 630. So given its previously and current pricing, it is a bit cheap at the moment. Now, as you can see, also where it is right now, it is on a support line. As you can see, we can draw a support line right here, where it is lying from a peak just before the breakout. If it will let me grab it like that, as you can see, on a peak right before the breakout. So yeah, and then of course we do see some resistance levels down here, as you can see where it bottomed out. As you can see right here, we do see some resistance levels here from previous points. Now this stock is a bit unusual just because of the way that it acts, because it's quite volatile comparing to being a insurance company, which I find quite interesting. Now recently, of course, it was because of their CEO getting killed. But then again, as you can see down here in the RSI, we have huge spikes and we have pitfalls all over the place, which is quite interesting. As you can see, we have it is almost up at 100 here in the RSI, something we rarely see. As you can see, okay, not 100, it was, my graph was off, like so. It was up in, what is that? 84, okay, that makes more sense. So, and then, of course, we do have some pitfalls down here as well, as you can see down in 13. So yeah, quite interesting. Now, as I said, I do like it just because I think that they're a great stock within the health insurance industry in the US. So if you want a stock in that, it's a good chance to buy now because it's so cheap. Also because I checked it out, they have not lost customers compared to how many you would think would leave after their CEO getting shot and all the bad press. So they're doing something right unless their customers would leave. As you can see here on their earnings, they earned quite decent money for every share they have. As you can see here, they earned what was the last time? They earned $6.81 per share they have. So yeah, quite nice. And as you can see, there's a huge company just in their market cap, $472 billion. That's insanely large. Now the dividends is 1.5, and they have dividends 4 times a year, which is not bad. I would imagine, and I would like it to be a bit higher for an insurance company, as they're typically paying quite nice dividends. But yeah, now as you can see here, they make decent money. Their margins are quite low compared to some of the other insurance companies I've seen, but that is because their main expenses is personnel, because they don't really have any products beside from that, from their actual, insurance. So some years where they have a lot of claims, it is gonna fall. And last year, I don't know why their margins went so badly compared to the other years. I have not been able to find that out. Now, if we take a look at it overall, as you can see, let's just go back to 2010. As you can see here, usually it performs very nicely. We only have, what is that, 2 years where it's minus, and that was last year. I don't think it would have been minus last year unless their CEO hadn't gotten killed. But as you can see, it's a decent company, which also shows that they make good money each year and their investors like them. So that is something really to keep in mind, that it is a steady winner. Now, the technicals on this for the day is a buy in a moving average and a neutral in the oscillators and a neutral in the summary. But for the month, it is actually a buy. And I think that is because, as you can see, it did fall down here all the way back in February, and it's basically a month ago. And ever since then, we have had quite a nice rally. And of course, recently also this golden cross, which is a symbol of upwards going momentum. Now, I wouldn't mind buying this. I don't own any stock at the moment of this, because I think I want to see it be a bit more stable up here, flattening out or increasing a bit more up instead of all of this spikiness. Also because it is quite spiky for an insurance company, so you need to have ice in your stomach if you want to buy this, because you need to see minus 30% and not sell. Now, in the 1 year price target, as you can see, it is a strong buy for most. It is 24 strong buy, 6 buy, 0 hold, 1 sell, and 0 strong sell. And as you can see, we have very, very nice and I think quite realistic price targets here. And also, as you can see, the earnings for the future, as you can see, it is just increasing year over year over year. And that is, I think, also because with Medicaid being taken away from some Americans, as it has been warned under the Trump administration, chances are more people are gonna get healthcare. So yeah, that is of course an advantage for United Health. So yeah, it's quite interesting at the moment. If you did like this video, please don't forget to like and subscribe.